Hey guys, it's Canadian Kyle here, and welcome to the Wealth Owners Podcast. Now, this is not the full interview. For the full interview, link below, thewealthownerspodcast.ca, where it includes the full interview, including the Vault segment, which is my favorite segment. It's mentorship-like questions, and I gain a ton of value from them. So go to the link. If you want to stick around YouTube, that's fine. Just make sure to like, subscribe, and share to get it out into the YouTube universe. Thanks. Enjoy. Hey guys, it's Canadian Kyle here at the Wealth Owners Podcast, and today I'm joined with the Silver Guru, Mr. David Morgan. He's the publisher of the Morgan Report. I'll be linking that in the description below, but we're going to be talking about silver today. David, just want to say thank you so much for coming on my channel and taking the time out of your day. I've been a big fan of your work for quite some time, so thank you.
Well, Canadian Kyle, I've got a lot of friends in Canada, and it's nice to have another one, so I'm ready.
Perfect. I always like starting off the interview by asking my guests what they were doing when they were my age. I'm 25 years old, so what were you doing from 20 to 25?
Oh, that's good question. I was I graduated from college when I was about 22. Degree in aeronautical engineering. I was one of the crew on the B-1 bomber for about 3 years. So that put me right around 25 and a half. And then after that program came to an abrupt end under the Carter administration, I was recruited basically by the Skunk Works for Lockheed. And they came to me and basically said, we want to hire you. And I said, well, what's it like? What is it? Is it supersonic or subsonic? We can't tell you, but you like it. Well, is it, so I went on and got no answers because it was a classified program. So I was probably transitioning between my first career job to another aircraft job.
Okay, cool. And you're known as the Silver Guru. So when did you get into precious metals, and did you get into it with physical first or stocks? Because those are two completely different things.
Yeah, well, it was combination of things. When I was 11 years old, the coinage changed from 90% silver. So that piqued my curiosity, but it didn't, make a big deal out of it. And then when I started trek toward money and got kind of obsessed about it, to be honest, I started looking into it, and I started trading stocks at 16.
Oh, okay.
And so as I pursued kind of the hard money bent, which wasn't really something I just sat down and said, oh, I'm going to be a gold bug. I just started studying money and banking on my own. And when I discovered what I discovered and learned it was fractional reserve and, about fiat currency and the penny of those billionaires, one of the books behind me, and, a lot of stuff, I became more and more concerned with how the banking / monetary system worked. So it was a self-study thing. And I pretty much, if I had my choice, probably would have, gone into business school and come out and, worked in finance right away. But that's not what happened. And I don't regret it. In fact, I have a lot of great stories about my aircraft stuff, but I was still learning. I was looking at the silver market every day during all those years. And I got onto the stock side because I attended a lot of what was called hard money conferences in those days during those young years, when your age or younger. And I learned a lot from the speakers. And of course, a lot of them wrote newsletters. I subscribed to some of them. And the one that impressed me most at the time was Jim Dines, who's noted as the original gold bug. Read everything I could get my hands on that he wrote, of course, in his newsletter as well. And that's when I learned you could get so much leverage in the stocks. So then I became pretty much physical. I always believed in the physical, but also on the equity side.
Yeah, and there's a whole different risk preference there. So I bet you had a lot of hard lessons when you were younger.
Oh, well, yeah. I mean, it's one of the biggest lessons I learned was how fast you can lose your money in penny stocks. How it's a lot about timing. It's a lot about the promoters. There's a lot of liars. And there's some good people that just fail, and it's hard to tell the difference. Mm-hmm. And it was a very expensive lesson. So when I started the Morgan Report, one of my prime objectives was to make sure anyone that paid me for my opinions wasn't going to get caught in this, penny stock hype. And so when I started with that premise, I very carefully decided to go ahead and have some in it because of the fact that some do well, Some do extremely well. Timing has a lot to do with it. If you're early in the cycle, anything with gold or silver in its name will go up, even if it's worthless. And at the end of the cycle, when it gets super hypey and it's going parabolic and everybody wants in the market at the last possible minute, anything with gold and silver name, worthless as could be, will go up as well. So those are kind of two gimmies. Anywhere in the middle between those two extremes, you've got to be damn sure what you're doing. So anyway, so many stocks that were left at the bottom of the market when I started the newsletter were gone. So all this fluff, garbage stuff was kaput. And there was very few things left. And the reason they were left is the reason was that, for an example, a mining company's primary shareholder might have sold his second home, his boat, his classic car, and sent his school to a state school instead of an Ivy League school. It did everything possible to scrimp and save to keep that project or that property. Well, you only do that if you really know or are darn sure that you've got a hell of a chance where something's there. So it made the picking really easy at the bottom. Anyone that had a quote unquote penny stock that had gone through that much pain, agony, and time and held it was a pretty sure bet. So I had extreme success at the beginning of the cycle with the junior miners because of that fact. That was kind of just common sense to figure it out. And I've got the reputation, which as far as I know is absolutely true. No one's disputed it. I could be off, but I have more companies that became physical mines than anybody else in the industry, and I'm not a geologist. The only reason I was able to do it is what I just outlined. So It's tough. And 1 out of 4,000 projects becomes a mine. And there again, even in today's age with the internet and everything you can do to get a better idea or better judgment on whether or not a project is worthwhile, there's still so much randomness and unknowns that the probabilities are better with certain projects versus others. But every now and again, even someone with the pure intent of doing a pump and dump actually finds something worthwhile and it becomes a mine. So it's a really tough thing, but I don't specialize there. I spent a lot of time there. You might say, well, you do specialize there. The more became mines, but no, that wasn't my intent. It's just the way it worked out. I learned what I learned from the best of the best, and that's big money goes into big companies, medium money into medium companies. Sure, speculate and hit those home runs. When you hit those home runs, you're up at bat one time. So take careful aim at each pitch. So I always say, bet a little to win a lot. And if and only if those specs turn into something spectacular or obvious they're going to be, then you can add. And then you can come to bat and hit and swing away, because if it hits a big discovery, then you're already following it, on a daily basis, you usually have an advantage. So stock goes, for example, from 25 cents to, let's say, $1.60. So you've already made multiple times on your money. Yeah. But if it's a $16 stock, and that pretty much by the calculations, meaning how big the ore deposit is, what the grade is, what the infrastructure looks like, you can do it, back of the envelope and get a pretty good idea of what it's worth. Then you can go ahead and I do, and I will give my opinion that go ahead and buy it at $1.60. But you had it at 25 cents. Yeah, at 25 cents, it was rank speculation. At $1.60, it's almost a sure thing, and it's worth about 16. So let's go ahead and add to it. So I teach that. I don't think too many people do, but I only do it. Well, I've broken that rule a couple times, and so far I'm not happy about it. But I only do it when the company's on its way.
That's some great advice for the young listeners out there. And I find that hard too. Let the winners ride is a very hard concept for me and other people, I'm sure, that are just starting out, but a lot of great advice there. Thank you. I want to ask you why more on the physical side now with central banks. You're fond of both gold and silver, but central banks just hold gold, right? Why don't they hold silver?
That you'd have to ask them, really. I mean, my theory, is that I don't know if they knew it way back in 1873. What they knew in the crime of 1873, you can look it up on the internet and read about it. But this is when the book was written around that time frame, The Wizard of Oz. That whole book was a metaphor for the Eastern banking establishment taking the West and basically screwing them by taking silver out as a monetary metal. So only gold could be used in monetary transactions. And that was a huge devastation to progress in the West, the farmers, the miners, the industrialists, you know, the industry that was going on at the time. Everybody that was at the, let's say, middle class on down was really devastated by the Eastern banking establishment that made a gold only rule, the yellow brick road. Dorothy had silver slippers. She could click her slippers and gone back to Kansas, right? I mean, you go back to middle America if we stayed on the silver standard. And that's Lyon was represented by Williams Jennings Bryant that wrote and said the speech, The Cross of Gold, which you can also look up. So I think that so that was the start of it. Whether they knew back then or not that silver was going to be a highly prized commodity for its industrial qualities or not, I doubt it. But they already saw a monetary conflict. I did a series of lectures a couple of years ago, and it was titled, What if Silver Were Treated Like Gold? And I said, whenever gold and silver had the same properties, meaning they were only seen as money. So for thousands and thousands and thousands of years, like 4,000 or 5,000 years, so 4 or 5, silver and gold were the same thing, money. That's all they were. It wasn't until the last 100 years or so that silver was an industrial commodity. When they were only money, and that's the only value silver had to the perception of humans, the ratio never got above 20. So when silver was money, the ratio stayed somewhere for around 12 for well over 1,000 years. And then it went to 15, 15 and a half based on, you know, Sir Isaac Newton putting the United Kingdom back on the gold standard. And well, what's silver worth? Well, it's worth, he looked out the window and said, 15 and a half times gold. There's more to the story. And so that was the chosen peg as the monetary value of silver relative to gold. And then, of course, when it was, you know, taken out of the monetary system, then it was allowed to float. And during that time frame, we've seen it as high as 125 to 1, which was as recently as March of 2020. And what's interesting is the value of silver has gone up, in my opinion, not as a monetary asset, obviously, but as a means of a high-tech age. Nothing conducts electricity, conducts heat, or reflects light better than silver. There's nothing superior, especially when economics is also considered, which doesn't just dismiss the fact that it's the best. It's just that it's the best and it's cheap because there's enough of it. I mean, the ones that come close, platinum, palladium, rhodium, whatever, depending on the application, cost more. So you've got something that's, you know, relatively inexpensive to its substitutes that aren't as good as it is. And away you go. So there's been, in my view, later, not from the 1873 perspective, but maybe from the 50s or 60s at the latest, somewhat of a back room, that's my word, system based on the Silver Users Association that was the big users of silver from industry that wanted to make sure that they had the handle on silver from, you know, from mine to mouth. And, you know, no one really talks about it much, but, you know, it was basically a consortium of the biggest industrial users of silver that formed a group of like minds to keep it at a price that was suitable to them, not a price that the market might determine on its own. And a lot of effort over different periods of time have been used in the propaganda press to make sure that people understood that silver was just an industrial commodity and it had no use as money, which is ironic because in all of the Romance languages, the word money and silver are synonymous. They're the exact same thing. And I get a little peeved at this one. I mean, there's a couple of what I consider uh, not as well acquainted with monetary history as I am in my field that say, well, everyone knows silver's not money. And that would be an insult to someone from France or South America or Mexico, any Romance language, because what you'd be telling them is, you are really stupid. You know why? Because money isn't money. They wouldn't understand what you were talking about. They would say, well, plata no es plata. It's like silver isn't silver. What are you talking about, you moron? But they'll stand in front of a large audience and tell everybody what they know, and what they know is silver isn't money. Well, they're wrong. At least for the Romance language peoples, they know it's money. So again, I do get a little hot about that particular point. Is it money now? Yes. Is it perceived as money by the population? No. Probably 0.02% of the entire planet thinks of silver as money today. And at one time, if you just go back roughly 100 years, unless you owned silver, you didn't have any money whatsoever at all. So a lot can change in 100 years, 120 years.
Yeah, it's money and industrial. And you mentioned the Silver Users Association. Is that still live and well? And was their main goal was to suppress the prices, right? Is that still going on?
I don't know. They've gone underground.
Oh,
Their
okay.
website no longer exists. There isn't, to my knowledge, I couldn't find it on the web anymore. It used to have a website. And in fact, they still, had a few publications back years ago. And I haven't looked, I did look recently, and I'm a pretty good researcher, and I can find stuff on the net that other people can't. I couldn't find it. So whether they disband it, and it's possible they disbanded it and they're still connected. It's possible. I won't go that far. I don't know.
Right.
I have a hunch that there really isn't, much of a consortium anymore. That's a guess. I don't know. I think it's been so well orchestrated out of the consciousness of anyone that invests about gold. Even, of course, the banks still have been net buyers of gold from 2011. As much as they diss gold, they all own it and continue to buy it. Silver, if it were treated like gold, if silver was treated as a monetary asset, it'd probably be worth more than gold on a paper value basis. Why? There's less of it. I mean, if you do it, if it was considered money, okay, so let's say it got to the worst case it was for those thousands of years, 20 to 1. So it'd be 1/20th the price of gold. So gold's at, I know it's not at 1,800 right now, but I do the math easy. So 10% of 1,800 is 180. So 20% would be 360. So you should have $360 silver. And there's 1/3 as much investable silver as there is gold. So it's 3 times as rare in monetary form. So you'd factor in, so you might just round it up to say $400 silver if it was held by banks as a monetary asset. But it's held by banks as a monetary asset. They own the 2 billion ounces of commercial bars and all the rest that's out there. So the other 2 billion ounces in coins and small bars for investors, you're still looking at 4 billion ounces maybe, and you've got about 6 billion in gold. It'd be very interesting. It'd be very interesting, but no one considers it. In fact, I'll go on. I hope I'm not talking your ear off, Canadian Kyle, but I had a hedge fund manager from the Asian countries. He called me on a consultation years ago, and he said, "Man, I really get it." I said, "What do you mean?" He goes, "I get silver." What do you mean? He goes, "If it's considered a monetary asset, you basically, my words, not his, basically rule the world. And if you considered silver on a monetary basis and held it tight, you not only would be like cornering, like say the palladium market, like the Russians are accused of doing, but think of silver. Palladium uses catalytic converters for gasoline engines. Right. What's silver used for? About 100 things you touch every day of your life. Every membrane switch, every automobile, every computer screen, every laptop, every keyboard, every light switch, every refrigerator, every washing machine. So if you own that asset more than anyone else and basically held the margin, in other words, in order to continue production of anything I just named and a lot more that I didn't, think of what kind of power you would have. If you had a lot of gold, you have to continue to tell people, well, it's valuable.
Mhm.
And I'm not saying it isn't. I'm pretty much considered a gold bug. But what use is it? Other than money and jewelry, really not much. But without silver, you could put the only thing you could do to the world that would cause a bigger cry or a bigger problem that you could own in theory. This is a thought experiment. This is not going to happen. Is oil. I mean, you shut off the oil supply for 2 weeks, that would bring down, that would be a greater hardship on the humanity on the planet than cutting off the silver supply for 2 weeks. But it would be the second most devastating would be silver.
So then I'll ask you, why is silver under $30? And when it moves, I'll add on to this question is when it moves rather aggressive, but then it comes back and corrects just as aggressive. So why is that the case?
Because there's enough silver in physical form to meet all the demand that I outlined. There's been, with a few exceptions, meaning for short periods of time, where the markets come back into equilibrium or better, that no matter how much paper silver has been printed, when you get down to brass tacks and you say, I need this much for refrigerators, for automobiles, for solar panels, for telephones, for cell phones, there's been enough. It's been that simple. If there wasn't enough, then the price gets forced higher, which is basically where we're at now. The price got forced higher from around 18 to about 28 a few months back, really. I mean, in the longer picture. And now we've got hitting around 23 or so. I'm not looking at you, not at the screen, but I know it hit like 22.50 or something yesterday. And it's been around 23 most of today, 23 something as we're doing the interview. So there's enough. And the only above ground monetary amount is held by silver bugs, basically. I mean, so few people consider silver money, but some people do. And in my view, some extremely smart people, and I'm not talking about myself, sometimes I question that, but Scott Maynard of Guggenheim, their chief investment officer, very smart guy. Smart not only because he's silver, I mean, that's what I said. I won't take it back, but I mean, smart as far as being gut honest about how the financial system has been way off kilter for a very long time. And the flaws in the system are more apparent than ever. And people should really, if they understand it, be scared out of their wits because of what's going on and what's going to eventually happen. And we're getting there, faster and faster all the time. So there could be a day once the run to silver happens where that spike happens, but no one's willing to sell anymore because they consider what they're going to get for it to be worthless. So, I don't want $100 for it. I don't want 200 for it. Okay, I'll trade you, 10 of these ounces for your automobile. Okay, I'll make that happen. Or I'll trade you, 2,500 ounces for your $500,000 house. That could happen. And not that it couldn't be turned into fiat. Of course it could. Mm-hmm. But it could spike and not, do the U-turn and come right back down immediately like it's done in the past. I don't think it'll do a palladium and go from, hundreds of dollars an ounce up to almost 3,000 and go at 3,000 for months and months and months. That's an exaggeration, 2,800, 2,700 right. For months and months and months and months. It's unlikely because of what we just discussed. I'll emphasize it. So far, there's been enough silver to meet the industrial demand. And as long as that's met, anything above and beyond that goes into monetary demand. So if industrial demand was like palladium, where there's only enough out there to feed what's required for catalytic converters, then you're going to be at a steady state condition where it goes basically ebbs and flows around a certain price, which is what palladium does. Now, let's say that platinum is substituted for palladium, which the Platinum Guild said it's probably going to be about a year ago when I wrote about that in the Morgan Report. If that's true, I'm saying if that's true, then you really, for a long-term play, you want to short palladium and go long platinum. Right. Because they serve the same function. Platinum can substitute for palladium. You might not hear it from people less studied, but it's true, you can. So there's a trade or not. I'm not saying it is or it isn't. I'm just giving you the fundamental facts about it. Silver could get to a point where it's similar to palladium, or maybe even scarcer from a supply demand perspective. I did a report from for the Morgan Report Premium, the paid members, and I did an interview with Matt Watson, who lucky enough to learn more about through the Silver Institute. And he's quite well studied in all the metals, really. Some of the exotics like iridium and rhodium and those, but pretty much on board the silver story, only because of the facts. And he's projecting in a decade's time that 80% of the silver supply will be used in the industry. So that leaves hardly anything for jewelry or silverware. And if those two still exist, which some will, no matter what the price, then there's extremely a thin amount available for monetary demand. And monetary demand 10 years from now, unless this crisis situation is rectified, which I think it will be by then, that's my take. That's my, I've said that many times. But if I'm wrong about that, and the monetary system is still in havoc, let's say, the monetary demand for silver and gold will continue to increase. So it's an interesting story. Most people are really upset that, why isn't silver higher? And the only way to force a commodity higher that's under management is for it to be so scarce, so rare, that the amount available is barely meeting the absolute demand. I hope I'm making that clear to you, because
for sure.
Even my own readers are like, David, like I have all the answers. I don't, but that's it. If there's any margin whatsoever to play with, then then it will be played with, more or less. So the main thing would be for everybody, that understands the monetary system, to wake up one day and say, gee, silver is really a solution. I need a couple ounces. If everybody in the United States bought 2 ounces of silver, you wipe out the annual mine supply every year. And if you think about, well, what does that mean? If you go back just 100 years or so, an ounce of silver represented about one day's work. So I'm asking everybody in America to save 2 days of their effort in a form that's been known as money for 5,000 years. That's all I'm asking. So if 4%, 5% of the planet held 2 days of their labor in monetary form, you'd wipe out the annual supply. I mean, that gives you a pretty good idea how small the silver market is. But the biggest shortage in the silver market is knowledge. I mean, people die for lack of knowledge. If everybody on the planet got to hear a lecture on silver, not necessarily from me, but let's say from, a consortium of people, or Mike Maloney, I don't care, pick someone that can articulate the story well and understood it, then there'd be enough people out of that 7 billion that would take action. Probably only 1%, but 1% out of 7 billion is a lot more than the 0.02% we have now.
So for people to understand the silver story, they need to understand the monetary story. And that's a rather confusing thing of itself right now. And it's a fiat system, and it's based on faith, right? And I want to ask you, why pay taxes right now? Because, and the reason I'm thinking, why do people pay taxes? Because if they can just print it, why do you have to pay taxes? And my thought is, it's for faith. If people don't have to pay taxes, that's where people lose faith and see this isn't worth anything. They just print it, right? So you believe in that system. Now, as long as you're paying taxes and people are able to live, how long can this go on for? It could go on for a long time, can it?
It could go on till enough people lose faith, and it doesn't have to be over, 50% or more. It only has to be enough for the, all markets move at the margin. I'm digressing to make the point. So, like palladium, there isn't any margin left in palladium. All the palladium that's mined is required for kettle converters, as I keep saying. So if all of the money that's out there, enough people say, just a few say enough is enough, I'm converting this fiat and I don't trust it, and I'm going to buy houses, or I'm going to buy silver, or I'm going to buy food. all that has to happen is for enough of that, whatever percentage it could be, it doesn't have to be very high, to move into hard assets, let's say, instead of digital money. And that will start a trend. So it's like trending on, social media. It's trending. Well, what's trending is I don't trust this anymore. So it's a psychological event, not a monetary event. The monetary event has to be there for it to take place at all. I mean, if there's no overabundance of something that's worthless, it wouldn't have any merit, because, the money supply was, just enough for everybody to have enough, then you wouldn't have any inflation, right? But if you have a massive amount sitting there not doing anything, and all of a sudden the idea is that this can't go on forever. How long can it last? I'm not sure, but I'm getting out early. I'm the first one to turn around and make sure that I'm protected or my family's protected. And then his neighbor does the same thing. Then his neighbor talks to his parents and his uncle, and he talks to, the dog catcher, and then they talk to their, all of a sudden this thing gets noticed really quick. It's trending, people take action, and all of a sudden it goes from zero to hero really, really quick. And that's pretty much what happens. If you study the Weimar Republic as one of many case studies on inflation, you'll see that it really didn't grab hold as a hyperinflation for quite some time. They're able to inflate, and people felt better, and the economy's good, and a little bit of inflation's okay, and then all the stuff you hear from the powers that be or the political class, not even knowing any better. I mean, excuse my arrogance, let me just spit it out because I feel like it. I mean, the political class is absolutely worthless in almost all cases. They don't solve problems. They don't, graduate from schools that teach you how to solve problems or design things or make things better, or, how to take chemistry and make it better, or structural analysis, or anything that actually builds society. All they do is, get in a big popularity contest and use a bunch of propaganda. And it's like a bunch of sixth graders running around who's the cutest of the two candidates. It's ridiculous. But anyway, back on point, it's a faith, it's a trust. And it doesn't mean the whole population uses trust. And I don't even know how to explain it better than that, but I'm going to try. And you'll have to look this up on the internet. But I think it's only a theory. I've never been shown it's proof. But there's this 100th monkey idea that there was like radiation in one of these remote islands. And the way to not get radiated was for the monkeys to take the coconuts and wash them. And if they washed them, then they got rid of the radiation. This is all metaphor, treated as non-reality. But just a few monkeys did it. But once it hit the 100th monkey, it went from just a few picking up on the idea to exploding, where every monkey on every island around the surrounding area was washing coconuts. That's the metaphor for, well, what happens? Well, what happens is all of a sudden it goes from, I said, zero to hero. And what I mean by that is the 100th monkey, that all of a sudden, everybody all of a sudden wakes up and says, man,
Right.
I'm buying as many boxes of cereal as I can because I only got $20, but right now they're only $3 a box, and next week they're going to be $5.
Yeah. And that's what's taken action. It might not even be precious metals. You just get out of the dollars and take action, buy food.
Exactly. No, a
but-
lot of it will be not precious metals. I mean, unfortunately, sorry to interrupt, but only people that have savings that don't know where to put it. They got enough food, or they can't store enough, or their trunk's full. They don't, whatever. And there's, as much as it, silver is bulky. I mean, if you're looking at a silver dollar, I mean, you're looking at even today's price, probably $23 for that, because it's pretty rare now. It's not a rare coin. It's a common silver dollar. And that's a pretty small unit for $20. I mean, anyway, the point is, it's really not very bulky compared to almost any other hard asset other than gold, because gold is, whatever it is now, 70 times 75, I haven't checked the ratio, more value for the same unit volume.
And precious metals is kind of a transition to the new system. But I don't see that. What is even a sound monetary system? Because even the Bretton Woods, correct me if I'm wrong, but wasn't the states on a gold standard for like 40 years later than the other countries around the world. But even then, with the Bretton Woods system, inflation's a problem, right? So it's kind of precious metals helps you transition to the new system or new currency, but this is a forever problem, is it not, currency?
Mhm. Yeah. Yeah, it is a human problem. It's not a gold problem. So if you go to, well, paper money works, in theory it does. And how does it work? Paper money works if there is a unit of account, call it a dollar, because most people think they know what that means. And
Mhm.
that every dollar was matched to some physical reality. So for every dollar, it matched up with all the wheat, real estate, oil, silver, everything else out there. And there was no expansion of the money supply. So it's zero. And then the expansion came on the credit basis where you trusted me to take my silver and turn it into a solar panel, and that's worth more than silver alone. And so that will expand the money supply. But as long as it's done in that manner, in theory, you basically run a paper money system. Well, the reason gold, particularly, but it's been a bimetallic standard or a trimetallic standard, copper, silver, and gold, or silver and gold, or sometimes just gold. It's a policeman on the currency to say you're not going to print more than what I just outlined. All those printed pieces of paper are backed by gold, and a true gold coin standard, you use coins, but let's say a true gold standard where every unit of currency is backed by a determinable amount of gold. So now you can't print more than there is gold. So it is supposedly identical to a gold coin standard. You're just circulating paper instead. But what happens is human nature, and human nature is that, there's a way to chisel this system and print more pieces of paper than there is physical gold. Or you could do a partial standard, which is very common, that, every unit of paper out there is covered by 40% gold. And then, well, 40's working just fine. Everybody's happy. Let's make it 38%. Yeah, why not 30 or whatever? So those type of things happen. But basically, gold is gold. It's an element. It's on the periodic table. It's got the same mass everywhere and always in the universe. So nothing about gold that is anything but a constant. What is also constant is man's ability to chisel off of each other. So even a gold standard over time usually doesn't work. And people bring that idea out, and they really love to harp on the gold bugs. See, gold doesn't work. No, humans don't work.
Mhm.
Gold could work. So could paper money, as I outlined. What doesn't work is our inability to have such high integrity that we can actually do what we say. Really, you only have to have a couple of laws that everyone obeys. Do everything you say you're going to do. I mean, that's like rule number one. If you do everything you say you're going to do, and you can't take from another person, you can't steal from them intellectually or physically, there's a price to pay for that. But, we're not that evolved. You've got thousands of rules and laws and mandates and
Mhm.
covenants and all this stuff. And, just because you write it down on a piece of paper and put it in a book and make it in a gold leaf cover and stick it on a shelf doesn't mean anything in a way, because of humanity. I mean, we're imperfect and we break laws, or we look at what's in it for us, or and sometimes people feel forced to it. I don't want to be, I'm not a sociology major, but there's times when you're haven't eaten for 3 days and your kids are crying, you'll do damn near anything to feed them. So,
For sure. One more quick question before we get into the vault. Time's flying by. But in this debt-based system, what is your views on using debt to progress? Businesses, governments, people do it for. Now, I'm sure you're not fond of margin accounts, but people trade on margins. People invest in real estate with debt. So, what are your thoughts on debt for the positive?
yeah, first of all, I'm about, pretty much as a free market advocate as you'll find, which means, I try not to tell anybody how to do, run their lives, or who they should vote for, or, what their drug use should be, or any of that stuff. As long as rule number one, do everything you're going to say. Rule number two, do whatever the hell you want, as long as you're not inflicting it on me, So I think, and I like to use the word credit, but debt and credit are the same thing in our
Yeah.
system. One
Mhm.
debtor is a credit to someone else. Is judicious use of credit's fine. I mean, that's how you expand the money supply. As I said, in a true gold coin standard, gold, let's say, doesn't expand. It does, because about 1.5% more is mined every year. But in theory, let's say it doesn't, where you could still expand it by credit. And you give me the a promise to pay me this much, more gold when I take that silver and turn it into a solar panel, because it's more valuable, it takes effort, takes labor, it takes construction, takes the idea and all that. So yeah, I think judicious use of credit or debt is fine. But again, it goes back to like the money supply problem. What is judicious? What is prudent? And that's where real bankers came into play. I mean, if someone had a great idea, he went to his local banker, sat down and said, John, and in those days, most of them knew each other. So, Kyle, look, I got this idea. I'm going to take this silver and I'm going to turn it into, whatever. And you say, that is the stupidest thing I ever heard of. You're not getting a loan from me. Yeah, but geez, I've got, this much silver in my farm, and I'll pledge the farm and the silver just to get the loan to get, make this thing happen. Go to a different banker. It's a stupid idea. So there's some prudence in the system back in those days where it's like, and actually the banker might have been doing them a favor, because maybe the idea was really stupid and the market would reject it. But on the other hand, let's say they go and they say, I want to double my farm. Wheat's been horrible this year, and I want to I've got the farm next door, I want to buy it or whatever, so I need the credit, and when I harvest only 2 years worth of excess wheat, if the prices stay where they are now, I'm going to pay you back in 1 year, but I'm going to be conservative and they're going to be dropping half. I could still pay you back by the amount of added production in 2 years. Banker says, John or Kyle, you are a genius, here's your loan. So yeah, fair use, good use of credit. But now, I mean, people just print money out of thin air. In fact, a good way to look at it is this. In fact, just popped in my mind. So it used to be, and not that long ago, that $1's worth of expanded money or credit, call it debt, $1's worth of debt created like $1.50's worth of GDP. Well, that's obviously a good use of debt. If I can borrow $1 and get $1.50 back, geez, that's exactly what the idea is. Right now, I've got to put in $5 to get $1 GDP back. Think about it.
Yeah.
That's where we're at.
Perfect. This has been great, David, but we got to get into the vault. It's my favorite part of every interview. It's just 3 mentorship-like questions. I ask them to every guest. It won't be available on YouTube. It will be available on my website, thewealthholderspodcast.ca. Feel free to link it in the Morgan Report if you'd like. But for YouTube for now, guys, unless you start subscribing, it's going to be excluded from there. It will be available on Spotify and Apple Podcast. But let's get into the vault.
It just doesn't feel right. Go with your gut. You know what? I could go back to that course. I look for a different one, maybe one that just resonates with me. And believe me, there's nothing perfect. You can go to the other extreme, and I'll mention this, analysis or paralysis by analysis.
Yep.
I mean, you're never going to get the perfect place, the perfect time, with the perfect amount of money, with the perfect set of instructors and all that. I mean, that's kind of a fantasy as well. But it's more of a feeling. It's like, oh man, I just don't feel this is right. Don't talk yourself into it. I'd say that's a big lesson. If I had done that, some of the bigger mistakes I made in investing would not have happened. As far as personal relationships, I wouldn't say that would have helped me, other than on the investing side. Not that I've had some really great personal relationships, but some that were so. Those for me in my life have surfaced pretty quickly. It's pretty easy for me to tell once, some involvement was there. Mm-hmm. But I don't want to overtalk it. I'd say that's it.
Perfect. Thank you so much. I'm going to respect the time here. David, thank you for taking the time out of the day. I do like letting my guests close off though, and usually they own companies, but go ahead, say whatever you'd like to the listeners out there.
Sure, I just run the morganreport.com. I only have a staff of about 5. They're very loyal and very smart, and I just always want to compliment them publicly when I have the opportunity. I do a free podcast every week. So if you go to themorganreport.com, sign up for our free newsletter, you'll get my weekly perspective, which goes through usually financial stuff. Usually I'm a bit philosophical. There might be some, cute, quirky thing to say about, the present day or long term. I usually do speak on the precious metals, and most of them, they're usually kept about 15 minutes. So I'm very conscious of today's time, everybody wants. So it's kind of a news clip filtered by me and my perspective. And again, that's free. So if you're interested in learning more, you can go to the website and hit some of the tabs. I've written 3 books, 2 of them are still available, pretty cheap for what they are. I do not do consultations anymore. I took that tab down. I just don't have the time. There is an About Me page, and it's not about me, it's about you. If you go to the About Me and you scroll down, there will be a link for a film called Four Horsemen film. I encourage everybody at any age group, particularly around your age group, Canadian Call, to watch that movie. It's free, and it goes through the end of the Age of Empire. And this is a cycle that happens again and again and again. And we're right at the point right now where it's failing. And to know it's a cycle and what it'll look like in the future and what adjustments you're going to have to make in your personal life, it's probably the best hour-and-a-half film you can watch, in my opinion.
Yeah, I watched it a few years ago, and then I watched it again to prepare for this interview, and it's a nice reminder. It's not bad to watch a second time. Thank you so much, David. I appreciate your time, and maybe we could do it again sometime.
I'd like to do it again. Thank you.
Thank you.